Hey guys, it's Ronnie. It is Tuesday, June 23rd, and I'm going to give you a market recap from today and go over a few trades and trade ideas we've been talking about since last week that have some of them have manifested themselves, and I was able to take a couple of trades that we've been waiting on yesterday and as well Friday. So we'll just go through a couple of trades, talk about kind of where the markets are right now, what's happening with respect to the macro environment, as well as what can we potentially look for as we go into earnings season, which is coming up in a couple of weeks. So let's get started. All right, first is the S&P 500. You can see on your screens are the S&P 500 daily chart, weekly chart rather, on the right, and the intraday 5-minute chart on the left. So I don't think so. Since my last video, which was I believe Thursday, a lot's happened in the sense that the market has kind of broken back above this purple trend line and is still kind of in this range right here uh, of these 4 weeks. You can see that this is these are weekly bars, so it's still kind of in this area. It is below this shorter term trend line from the base of the crash, and so we are still in a good position with respect to potentially looking at shorting it or looking at shorts on the S&P 500 as well as the Dow and the Russell indexes, the IWM is the ETF there. So looking for continued at least either chop in this area or weakness, so sideways to down action, or at least to have the levels of resistance on this market stay intact, which for me, the first level of resistance that we would need to pass through are this triple top right here. You can see with these three daily bars. Now we're on the daily chart. We have these three bars that have a top almost at the same area, at this 3154-ish area. So that's kind of the first level I'm looking at. If in the next couple of days it gets above that, we talked about the gap fill here, this island reversal up here that happened a week and a half ago. We're looking to stay below the kind of the bottom of this last bar here, which is 3181.49. Even though this is a little bit inexact, we can just make sure to correct that 3181.49. So that's what we're looking at actually as a gap fill. So if the market, if the S&P does make it up to this level, we'd be looking for this level to hold. And so after that, if that level does happen to get breached, the next level we're looking at would correspond to this downward trending line, which is from the top, the all-time high, to the lower high back in June 6th, around June 6th. So these are the kind of couple of levels of resistance that we're looking to hold. And actually, since Thursday, really, I mean, it looks really good on Thursday. If you take a look at the market here, this is through Thursday. And it looked like we were rolling back over, right? But we did hold this purple trend line still. So we were really looking for a break of this trend line and some continued uh, lower lower lows and lower highs in the market. Friday was, quadruple witching with the expirations and options, and it definitely did increase the volume. So, and it did have a little bit of a volatility to that day too. So you can see here the bar. There was a big red bar, opened up high and then kind of came down, throughout the day. However, it still held the purple trend line, which is that complex longer-term trend line, as well as the 20-day moving average, which is this green line right here. So, it did manage to hold that. So it still was kind of a neutral signal on the market. It wasn't bullish by any means, but it was still hadn't broken this trend line fully, like broken and closed below it. I mean, you can see it's pierced it a few times again. I mean, it was below it, went above it, and is just kind of actually consolidating right here. So at this point, we're really looking for a breakout either above or below this range in order to kind of see where the next move in the broader S&P 500 would be. So, and this is, this green bar is Monday, and today's daily bar on the S&P 500 is this little tail topping. It looks like a topping tail, but it hits at this level of resistance that we've had the past a few days. So, depending on what the market does in the next couple of days to end, and to end this week out, we'll talk about kind of what action we want to take with S&P 500, either puts or calls or whatever that might be. Like I said, I personally am looking for it to stay below these areas of resistance. I'd really like to stay below this triple top here and kind of break down below this purple line. That to me would be make the most sense and ideal. But things are not making the most sense right now in the market, so we just kind of have um, to use what we get in information that's generated by the market to make our decisions. So right now, consolidation mode. We're waiting for a breakout or a breakdown in order to kind of think about the broader market and where it's going. Um, so that's the S&P 500. I do want to show you the Nasdaq real quick because I mean there are markets that are, you know, really strong. So even though the S&P 500 may be kind of in this consolidation pattern, and we're kind of waiting on a move. Same with potentially the Dow and the Russell. Um, the Nasdaq in tech is actually pretty strong in general. So I'm going to pull up the QQQs, which is the ETF on on the Nasdaq, and you can see it's at all-time highs. Today, it actually made an all-time high again. Previously to this week, and previously to last week, actually, it had made an all-time high, kind of a topping tail, and started to come down, um, from that high, pretty strongly with the rest of the market. And then coming into this week, it's just popped up and has again made an all-time high. So tech is actually pretty strong, and not just tech. There are just several stocks within tech that are very strong. So we talked about Apple previously. I had a position previously in Apple. We'll go ahead and pull Apple up. Previously, I was actually looking I had shorted Apple, and I made profit on that with my put options, and then I had a call spread that I sold out of as well last week, which is a good thing because as you can see, what we were looking at in Apple over the long term was this again purple line, which is a complex trend line here. Um, it's actually just a pretty steep trend line from back here in October of 2018, the top there, and then the prior all-time high, which was back in January, February, and so we kind of used that as a guide to potentially look at a level of resistance for Apple, and it actually had acted as such the past couple of weeks. See these two weekly bars kind of pushed up to that level and then pulled back, and so we did get out of our Apple positions earlier last week. And so, but you can see what's happened the past 2 days because of whether or not it's because of it, I don't know, but it is timed with the Apple Developers Conference, the Worldwide Developers Conference. They just released their new iOS, some new hardware. They announced they'd be getting rid of Intel chips. So they have had some news the past couple of days, and so it has pushed above this trend line. And actually today had kind of a topping tail. It's a little. It'll be interesting to see what tomorrow does. So if tomorrow it doesn't, if it gaps down tomorrow, or is below this topping tail pattern, that's kind of an abandoned abandoned candlestick pattern, and so we would look for further pullback. However, as strong as Apple is, I don't know what's going to happen. It is very strong, along with the other tech names: Facebook, Amazon, Google, Microsoft, Netflix, even some of the semiconductors names. So, we're really, whereas tech has been super strong, and you can see that by the all-time highs being formed in a lot of these stocks. The S&P 500 is still, the S&P 500 is still, pretty neutral right here. So, but if you use the Nasdaq as any kind of predictive, I guess, factor, like perhaps these markets are going to catch up to the Nasdaq. That is something to really be aware of and think about. This is the Dow Jones Industrial Average ETF, Diamonds DIA, and it's doing, as you can see, the similar thing to the S&P 500. IWM as well, which is the Russell, um, excuse me, the Russell 2000 index is also in the same boat, right? They all look kind of the same. They're below. They're not at all-time highs. They're actually below, uh, you know, different moving averages or trend lines, and are looking pretty weak to neutral. So we're going to keep an eye on that divergence between the Nasdaq and really just the top 5, 10 stocks in the Nasdaq, as well as some of these other um, markets as well as industries and sectors. So something like financials, which is weak, it continues to be weak. You can see this is the XLF, which is the financials index on the daily chart. It looks very similar to some of these other markets like the Russell 2000 and the Dow. So, I mean, tech is showing a lot of strength, a lot of relative strength compared to the rest of the market. So that's something to keep an eye on and think about. I'm going to have to rethink that. I mean, obviously, that Apple trade was simply because of that trend line and the weakness in the market. It was a trade, not a long-term view. So I am not really looking to get back short Apple anytime soon, depending on, what it really what it does. But it has crossed above this line. So unless it comes back below this line quickly and kind of fails that breakout, if that breakout fails, um, then I can consider potentially getting back short Apple. But it would have to get not only below, back below this purple trend line, but also really below this area of consolidation. So that's what I'd be looking for. Just because it's been so strong, I'd really have to have some weakness in it to get back short Apple. All right. So a couple things that we've been talking about and waiting on getting into over the course of the past several days and weeks has been gold. And so gold has been actually really strong the past few days, and we had an opportunity to get in it a couple of days ago on Friday. So I did get in some gold on Friday. I'm still holding it. You can see we previously had spoken about this consolidation that was happening in gold. Uh, this kind of flag pattern right here, even though it was choppy, it's pretty tight pattern. If you look at it on a longer term chart, for example, like a weekly, you can see this tight area of consolidation here. And what I had mentioned was I was looking for it to break out above this shorter term kind of downtrend line, which captured this this not all-time high, this recent high of 1789.50, and then this second high here a few weeks later. And so I was looking for a breakout above that, and I said I was going to buy some on the breakout, and then I was going to buy some over this high as well, which this high was 1788.80. So if you look at the daily again, you can see it got there today. So it actually, I did buy some Friday on the breakout here. Wasn't the best pattern, but it did stay above and close above that uh, trend line. So I was able to stay in my position. Monday looked really good. And then today, it actually did get up above that 1788 level, and then came right back down. So that's this area right here on the left side. You can see it did make it above right there. It did peak above there, but closed below. So that's actually not a great sign. I didn't add to the position up here. I wasn't watching it that closely today and didn't really uh, get an opportunity to add to my position. But that's okay. I'll if it crosses back above it again, I will add to it. Um, but right now it looks like it kind of looked above and failed. So this is, maybe a double top. So we'll see what happens tomorrow in gold. It is kind of extended, from the from this consolidation area a little bit the past couple of days. So maybe it needs a little bit of a pullback before it continues. But over the medium term, gold is pretty bullish in my opinion, just based on the interest rates being at zero and the Fed kind of pushing in all kinds of fiscal, like pushing out fiscal policy, monetary policy, and fiscal policy to try to like stimulate the economy as well as keeping those interest rates low. That in essence weakens our currency value and should theoretically increase the value of the precious metals like gold, silver, and even something like Bitcoin. So you did get into gold, so holding gold. We talked about bonds too. Bonds are kind of let me just get you on the 30-year bond here. The bonds are still, still haven't crossed above this area that we were speaking of. That it needs to get above before I'll consider getting back into it on the long side. So this 178.18 area, this overhead supply here. Once it gets into this range, I would think about buying more. But right now, you can see it hasn't made it up there yet to these prior highs, and then that where that circle is. You can see there are three highs right here, um, and so until it gets above this, I'm not going to really look to get into bonds again. But right now, I'm satisfied with gold and the way it's been acting. Silver's actually been acting okay as well. You can see this is the silver futures, and it did have a pretty big dip back in March, April, like during the whole market crash, but it has come right back up to this area of, close to this area of resistance up here at this 1891 area on the futures. So I'm looking for silver, again to push above this trend line and actually get above these prior highs. So these areas where it's tapped um, around that 1891 area, really want it to get back above that before I buy it. And then, I have the longer term view of silver is that it's going to be outperforming gold just because it is kind of volatile, and it also tends to move much more percentage wise than gold in a situation where gold is rising. So here is kind of a longer term view of silver, and you can see I have this trend line here that is from a prior high to the more recent high on silver, and so I'm looking at that level pretty closely too. If it can get above that level, that's really bullish also. Um, and then we can put a little pivot right here. So some of these are just like levels to look at for silver as it starts to make its move to the upside. So as it breaks through, this area, 1891 area, I'll be looking for a push above the 1950 area, then the 1975, and I'll probably add more if it crosses above 1975 with a target of 21. So looking for some bullishness in silver also in following with gold. So whatever it does before that, I don't know. I am waiting for it to cross back above, really above this 1891-19 area before getting into it with any kind of size. So that's gold and silver and bonds, and really, and the general markets, of course. And then, uh, really, we're just waiting on. There's earnings season coming up. There's in a couple of weeks we'll start getting earnings from the bigger companies, and it should really give us a good idea of where companies stand, what they're going to be doing with their dividends. If anything, the banks are undergoing their stress test also. So we'll see how financials perform, and what they're going to be doing going into this later part of the summer. So volumes could also be down in the market because it is summer. Even though people are technically kind of staying at home due to COVID-19, now with states opening up and things of that nature, states opening up, different phased openings, people going out of town, people able to travel and get out of the house now. I feel like there's a potential for the volume to kind of deteriorate into the latter part of the summer. So we'll see how that works on the market as well. But right now, this market is really kind of just in a holding pattern, in my opinion, except for the Nasdaq, which is just I think a little bit overextended and very heavily weighted towards those few stocks that are just outperforming tech sectors. The tech sector stocks that are just continuing to make new highs every day and just doing really good things performance-wise, as well as uh, with respect to their stock performance, their own company performance and stock performance. So that's it for now. I will, as earnings start coming out, I'll be putting out some more videos on trading post earnings, as well as you know any moves in silver, gold, bonds, as well as the S&P, which I like. As you guys know, I'm looking to kind of get short the S&P and the Russell, as well as financials. I'm looking to kind of stay on the short side of especially small caps and financials going into the summer. So later part of the summer. So we'll see what the market brings us. Every day is interesting. Things are totally the opposite of sometimes what you think they will be. But a lot of that has to do with the intervention, by the Federal Reserve and kind of the uh, buoy. Basically, it's giving us a buoy in the markets and is holding everything up, propping everything up because of their policies and free money basically. So um, with that, you guys have a great evening. I hope everybody's doing well and was able to at least get a trade on gold. It really broke out well, and I'm looking to hold it for a little bit. So we'll circle back on all of these trade ideas, as well as think about some new ideas going into the latter part of the week. I look forward to it. You guys have a great evening and happy trading. If you want to be notified of when my next video is going to be released, just follow me, subscribe to the channel, and as soon as I put out a video, you'll get a notification. So take care, guys. Have a great evening again, and happy trading.